In yesterday's video, we talked about the possibility of a new commodity super cycle, so that commodities as an asset class could see a really strong multiple year of performance for investors to sink their teeth into. Today, I want to extrapolate a little bit more on this because there's a pattern here that I think might help everyone here kind of see where the sequence might be coming from. So what I'm going to do is I'm going to first start off with that same chart. This is the commodities index. The Bloomberg commodities index is kind of like the benchmark for commodity indices. And essentially what we are saying here is that we think that after a consolidation having made higher lows, this is just a technical picture, of course. There's all sorts of structural and even some fundamental, but really more structural reasons to be bullish commodities. We have essentially what's called monetary debasement, which kind of basically inflates all financial assets. That would probably include commodities. But just quickly on the technical aspect first, you can see that we're making higher lows. And even if we just had another rally like we had out of the breakout in the year 2000, we could easily see, 70, 50, 60, 70, 80% move, which could be quite significant and get us back to, let's say at the very least, back to where we were roughly in May 2011. So there's that. Now, the reason I'm bringing this up from a sequence perspective is because we have other assets that have already done this. So this whole breakout actually of assets breaking higher actually started with equities. Now, equities, of course, have had a pretty nonstop run for U.S. large cap equities, largely basically the tech sector has had a very strong performance. But the latest rally, the latest leg higher, essentially took place, I'm going to say roughly in late 2023, so October, November 2023. That's when this green line here you can see started breaking above, or at least started gaining momentum to ultimately overcome the December 2021 highs. You might see, if you look at this closely, from December 2021, the green line, it took 2 years for the equity market to actually overcome that, right? So that's December 2021, and we finally overcame it in, let's call it December 2023, right? So again, 2 years later. So the equity markets had this move now, which is really this move here, right? So let's have a look at something else, and this is something that's very topical this year, of course, which is essentially precious metals. And we can look at metals here in general, the blue line. Gold, of course, had a big move. And this is more metals in general. So we're using something called the XME. That's not the same thing as gold, but you can see the move, the sequence that has kind of the way it's unfolded. And you can see the blue line too. It basically consolidated from, let's say, March 2022 all the way until about June 2025. So that's about, 3.5 years, 2022. Yeah, so it's a long time of consolidating, finally broke here. So the question is, if we have monetary debasing, which we do, is ultimately the commodity space, so I'm going to go back to just the commodities chart, is that ultimately going to follow what the large cap US equities have already done, what metals have done, what gold has done, by the way, other things too? Is that going to be following next? We think yes, which is why I thought I'd make this video and extrapolate a little bit on the video from the other day. If this video helped you, please make sure you subscribe to the channel, you give us a thumbs up, and if you want to see this approach in action, you will want to join us in our Set the Market morning call, which happens at 9 o'clock Eastern Time, Monday through Thursday. Make sure you join us for that in the link down below. Again, subscribe to the channel. I'll see you in the next video.